Happy Friday, Bearable Traders. I'm going to do a slightly longer recap today, and you're going to have to forgive my voice if I cough or choke. I've been a little bit under the weather. Now, the topic of risk management has come up quite a bit recently, so position sizing, right? I know a lot of people in the forums have been sharing these spreadsheets or note cards they have that tell them how many shares they can take based on whatever dollar loss. Now, I want to highlight this hotkey that one of our members created, Kyle K29. I'm going to put the link to this forum post in the description below. What this hotkey does, it takes all the math out of it. Basically, what you need, so as with any position sizing formula, you need to know, one, what is the loss you're willing to accept? Either that's a dollar loss, right? Some sort of dollar loss, 50, 100 bucks, 200 bucks per trade, or a percentage of your account. Obviously, the dollar loss is a percentage of your account, so 1%, 0.5%, 2%, whatever. And then the stop price, right? The distance between your stop and your entry. That's the second thing it needs, right, to be able to calculate this. So what this hotkey does, let's do a setup here. Let's pretend this is a bull flag or something, right? And you want to go long at the break. You want to go long here, and you put your stop here, right? Say you're willing to risk, I don't know, 1% of your account, which is $50, whatever that is, right? So 50 bucks. Now, what you do with after this hotkey is you double click on your chart. You double click, click here, and it'll calculate the current price and your whatever the level you clicked, right? So say that distance is 25 cents, right? So based on the math here, we know that we can take 200 shares. So when you press that hotkey, it's going to enter your order, 200 shares, and off you go, right? That's one way that you can do it. You can also change the hotkey rather than sending the order right away. You can have it just load. It'll just load this value into the montage. You can double check the value, press enter, and then off you go. So that's one way to do it without all the formulas and stuff. And personally, I started using this earlier this week, and it's been a godsend. I can't thank Kyle enough. He's done a fabulous job working on this, updating it, improving it, change log, all the stuff. The guy's a genius when it comes to scripting, and a genius with the DAS hotkeys. So again, I encourage you guys to take a look at this. Obviously, test this in simulator. That's the disclaimer, right? Make sure it's all working for you. But for me, personally, it's given me confidence. I know that when I'm getting into a trade, I found my stop loss, I press the button, I'm risking a certain amount per trade, each and every single trade. It's standardized now. I don't have to worry about the share size because we've all been there. Sometimes we see a fast mover, we press the hotkey, we're in, and then next thing you know, you're kind of you're in over your head. You're like, holy smokes, this thing has crazy ATR. I can't. I'm not going to be able to survive these pullbacks with this my regular size, right? And other times you go in half size or regular size when you realize, oh, my stop is only 15 cents away or something on some slow mover like GE or whatever, right? So this just you find your stop, double click the chart, you're good to go, and you're not going to lose more than that. Anyways, let's get into risk management and use some examples of trades I took today. So STX, this thing gapped down on SSR, is very weak. For some reason, it squeezed and just ran up all day. I was looking for a top. As you guys know, I play the bottom reversals, but now I'm trying to find these top reversals when things take the elevator down. So this first trade was terrible. I preempted it. I thought that this was a false signal, this reversal candle here. Really should have waited for at least a new 5-minute low, if not a 15-minute low. And it didn't give me either of those, right? No new 5-minute low, no new 15-minute low, and it didn't even give me the moving average crossover. I just preempted it like a fool. I was looking for that. It didn't happen, so bad trade. Originally, my stop was here at this break, and as soon as I saw that the moving averages, the 9 and the 20, were holding, I didn't need to wait for my original stop to find out. I just got out, right? So that's one example of moving your stop based on price action. The original setup is no longer valid. I don't need to waste my time or my money waiting to get stopped out, right? Then I flip positions after that. I saw that this, okay, so I was wrong, and this is now forming a wedge with a flat top. I'm looking for a breakout above here, right? So I went long, looking for a breakout. I put my stop, where did I put my stop? Put my stop here, and my target was here, this moving average on the 15, 40, 60, whatever that was. So something like 3 to 1, 4 to 1, whatever that is. And I just put a range order and left because it was a really slow time of the day. It was Friday afternoon, right? Put a range order left, came back, and it was flushing. It was just dumping here. As you can see on the 5-minute chart, it decided to dump, and I just got out right before break even, right? So my original stop was here. Obviously, this move is falling apart. I don't need to hang on to here. If I was actually sitting down earlier, I would have gotten out here on the new 5-minute low, and maybe would have been a winner. but that's not a big deal. It's a scratch, right? Scratch. Right, so now before we get into the third trade, let's talk about a couple things here. Risk to reward. Now, I personally track two metrics of this. I track my target risk to reward, what I call my target RR, and I track my realized risk to reward. Excuse me, realized risk to reward, RRR. Now, the target is what your original stop is and what your original target is. This needs to be greater than 2, right? You should be taking setups that are greater than 2. You want to track this in your journal to make sure that the setups you are taking are realistically greater than 2. You don't want to be taking these 1-to-1s or 0.5 to 1s and that other garbage, right? Now, realized risk reward is how well are you taking profit? And this is somewhat out of your control, because sometimes you'll scale out, the move will bounce back, you come out with 0.5, sometimes you'll come out with 0.1, sometimes you'll come out with 2, 3, 4, whatever that is, right? What I'm trying to aim for 1.5 on this realized risk to reward, right? Because we're always scaling out, and sometimes trades don't always go full continuation. And this needs to be a greater than 1. It has to be greater than 1 for you to at least break even. Because our losers, when we lose, it's you're automatically taking a -1R if you're stopping out of your original stop, right? Sometimes you'll stop out before, but whatever, it's going to be -1R more or less. So your winning trade's got to be at least +1R. If your accuracy is 50%, that's just break even, right? If your accuracy is 60-70%, maybe you can get away with a lower number, but 1.5, 2 is really well if you can realize 2. Really difficult to do in real life. Anyways, so STX, as soon as I saw this engulfing and crack here, I decided, okay, my original theory of it topping out, I think this thing's going to top out. It has to get back to VWAP. It's so weak already. Testing this level 39.86, which is the pre-market, something in the pre-market. And I shorted it here. Take a look at the 1-minute chart. I shorted it right there after the 9 and the 20 had crossed, preempting the 9 and the 20 crossing the 50. I put my stop 10 cents or so above this 50. If it were to come back on me, then I know that it's another fake out. So my entry was 39.95, stop 40.10. I'm looking at a 15-cent stop. My targets were here, this moving average cluster, 30.50-ish, and hoping to get to 39 whole dollar, which is also some level, and then obviously VWAP. So I have an original risk to reward going into this, that's at least 2-to-1. Then I have potential other targets that I'm hoping to get to, which I'll hang on to if the price action dictates it, right? So let's look at how I scaled out. First scale out 39.50. That's 40 cents, right? So I got 40 cents on the first partial. That right there is greater than 2-to-1, right? What is that? 2.3-to-1 or something, right? Next partial at this moving average, right? It actually bounced along that moving average for quite some time, found some support before it keeled over again. So that was 70 cents on the next partial. Then the third partial, I got out here at, what did I get that? 39 whole dollar here, 39 whole dollar. So now that's 90 cents I got off that. And then finally, right before the close here, I didn't want to hang on for the last 10 minutes. These things can get pretty crazy. I just got out here at 38.80 or whatever. Didn't hit VWAP, which is kind of sad. And that's $1.10, right? So what's the math on this here? 40 plus 70 plus 2. That's 77.5 cents a share that I took. Realized over 15-cent risk. Whatever, the decimal place is wrong, but you get the point. That is a 5-to-1. I came out with a 5-to-1, which is awesome, right? Originally I tried to get a 2-to-1. I came out with more, and that's great because that can offset the times where I don't get at least 1-to-1 or 2-to-1 where I'm scaling out early, right? Obviously these trades are far and few, but they help offset the lower risk to reward that you get. So anyways, that's the trade, hanging on, letting your winners run if you have a target in mind and it's not going against you hard. If the theory is still valid, like it was here, it's always good to hang on to whatever shares you have. So that's position management, risk management, trade management. I hope everyone has a good weekend, and I'll see you guys in the chat on Monday.